again, once we get down to this 39.31, which I really think is going to be tested again, okay? 392.50 is the SPY support, and I do mean support, and 3931 is absolutely important. I don't think I've not mentioned that number every single day for weeks. Have to get and close below 39.31 if you're very, very bearish. It has just held up like a champ. You can see once we got above, we stayed above. We even tried to move higher, came right back down and stayed above, moved higher, tagged perfectly, came back down. It's very, very important to break that 39.31. I got nothing until then. That's a huge divergence in my eye, huge. So I'm watching this going, okay, tag, you're it. This is exactly where the market will support 39.31. Can't hear it in my voice, but we haven't busted. We have not busted through. This is done, however, for next week. What does that mean? It means this bearish engulfing, which is now just about ready to take out the low. By the way, that low from last week is 39.1839. We really, really need to take out that low. And then we could have a little bounce into tomorrow, 39.50. I think we're going to see 38.70 next week. End of next week, we'll be down to 38.70 just because of the size of that candle. Look at the 10 week. Look at the 30 week, the 21 week. They're just sitting here. 39.32. The 10 week is 39.26. 39.26. We need to close below 39.26, and we have a much higher probability of a sell-off into the year end, despite seasonality. I mean, this is very suspenseful. All right, so by 39.31, I'm talking about the hourly, right, where we got down and we held, and then we retested, and then we did this fly higher on CPI, and then a rollover. So it's really a very nice H. Oh yeah, we'll hit 39.16. All right, so if you are pressing short this morning, forgive me for not getting this to you earlier, 39.16. First level, let me make sure I got that exactly right. Yeah, 39.16. Oh, we're gonna have drama next week. I mean, we're already having it this morning, but I mean, even more so. Look at the failed, look at the rollover. So below 40.62, clearly we're going to close below that this week. 39.50, still we could bounce. But right now, as long as we take out $2 more, we're going to head down to 38.70. Remember, we're twice the expected move today. It was 0.87. We're at 1.6. High conviction is 3916. High conviction, 3916. There we go. Just hit it. 280.21 was my level on Qs. But for me, I'm going to say, let's see what they can do at 3916. 3916. We're going there. But will we beat and push below? Because right now we're sitting on the 50-day. You can't see it so well, but here's that red. Here's 3,900 where there are no puts below. Think about that. It's a ghost town. That's a liquidity nightmare. All right, so intraday, 39.16 is extremely high conviction for me. In other words, we're going there. The question is, do we break below it? If they're going to, they better show up. We've just broken that 39.16. That was high conviction short. Next level, before we get in trouble, the prior low here on November 17th, 39.06. You know where the gap is? That first gap? Sorry. Let's do that again. Just trying to clean this up to show you. We've been here before. If we do not get defended, there we go. This is gap fill. Cleaned it up a little bit. This is gap fill pre-CPI. That was that, oh my goodness, I forget, what was it? 4 or 5 standard deviation move, right? From here to here. So that's a lot. I'm trying to make this nice and easy here. They're trying. We got defended here before. 39.06. We've basically gone through, right? 39.31, 39.26, 39.16. Now we're at 39.06. And if we break 39.06, next high conviction level is 38.80. 38.80. We've moved a lot. Remember, expected move today was 0.87. We are extremely volatile underneath the surface, even if VIX doesn't say so. Ignore VIX. This is a big deal intraday. Remember, there is a ghost yard of puts below 3,900. That's where liquidity is lurking. Illiquidity is lurking. So if we don't get defended here, the next level, 38.80. So if we don't get defended here, the next level, 38.80. But the gap fill is way the heck down here at 37.68, 69, 37.69 area. Very strongly that we would break and stay below 39.31, which is really important in my book. And now here we are at the 55-day, getting a little support at that prior low, right? This literally was the November 17th low. So we got 55-day, which is that red line, and a prior support level. They defend, or we're going to come right back over despite support. So now this is, my gosh, that is such a bearish engulfing though. That is just such a bearish engulfing candle on the weekly. So I'm only interested in seeing if we're going to break that 39.06, because that's definitely the area for more weakness. Otherwise, bulls can defend here. They're monetizing the 39.06. When we break that, it's going to be a whole nother ball game. But we're not there yet. They're absolutely trying. Look at this. Even on the intraday, here's your Bollinger Band tag. Here's your fib level of 127. Yeah, they're definitely coming in now to defend. Whether you're making 6% or 60% on that bear short, just make sure that you are protected here. It does not mean we're not going to go down lower next week. This is a very bearish bar. But we still got to get through the afternoon and tomorrow options expiration. This is where they do a lot of rug pull for both bears and bulls. It's nasty. So just take care. The one caveat I would add is that if we continue, if we get some follow through on this dollar, SPX is going to lose 3,900. Is that there are no puts of size below 3,900. The vacuum, I don't know how else to put it, an air pocket of risk, a vacuum lower. If we break that 3,900, we're already below 39.31. So what else can I say? The risk is just growing. We're not done selling. I thought we were done selling today. We might not be done. High conviction, I said, was 39.16. We already went there. Yeah, we got supported at 39.06. But we're still rolling over. We already know about this rolling over. That is a very bearish candle for next week. Trying to get through the day. Can we bounce back up into 39.31 and then reverse? We're very extended from the mean. The mean is way the heck up here. Intraday, there's no way I see us going back up to 39.77. But I do see 39.31. And then we got to see if we get rejected here. But 39.31, yes. I think we can go back and test that 39.31. We are just really not at all getting defended. Seriously. Dollar is green, net selling indicator is red, not by a lot, but those two combined influences are making this very exciting for a flush. I'm very curious because you know the market can come in and save it on a dime. But right now, we are at risk of breaking 3,900 and flushing lower. Market structure below 3,900 can bring us very quickly to 3870. A break of 3870 brings us to 3780. Let's just call it 3800. Break of 3800 brings us 3700. A break of 3700 brings us to 3600. A break of 3600 brings us to 3500. So basically, we have risk for sure of trading lower. The question I still have in my brain for year end is above or below 3,800, because that is a massive, important level. So in other words, we're picking up the odds of moving that way into year end. I still think that 3,800 is a really good price target for year end. I know I've written about that before, and we did hit that 4130, but it was sloppy. It doesn't really even count, right? From November 1st. Why does it not count? Because it was in pre-market or it was in the ES. It wasn't regular trading hours. We've only hit 4,100 twice, here and here. And that is a massively bearish candle. So can we pop back up to 3,950? Sure. But that is a bearish rollover starting. And I don't just mean today, I'm talking about end of the year. So seasonally, we typically have very good strength into the last 2 weeks of the year. I don't see it. I really don't see it. But we're getting defended intraday. Long story short, you can see it right here. This 3916 tagged. And oops, sorry, let's do this. This 3906 is now your new level. We break 3906. We're going to have a nice retest. I'm going to take that out and put in the gap fill here. 3818.20. That is not hard to imagine we get to, right? Really, really not hard to imagine we get to 3818. And that's the whole November CPI short covering rally unwound. So that's what I'm going to be looking for. But not today. Not today. They're coming in as usual, like you said, Leah and John, and making that higher low formation or whatever. The bull's defending. We get this bump up at this time of day. Amazing, right? Oh, that's right. And Craig reminds we need to keep an eye on the 3835 level, which is the high strike for the JP Morgan hedge fund collar position for 12/31 expiry for profit taking. So long story short, that's the one I wanted to get. Here we go. Right. This was printed a few days ago. I wish I had this time stamped, but you can tell it was CPI. So we are now, now we'll update this, of course, but we are now pressing below that 3950. Okay, so this 3900, we pierced below and we have an air pocket of risk right to 3800. That is just literally, sorry. That is just literally what I see for year end. Can't help. I just can't help it. But right now we've pulled back here, this 3,900. Maybe we bounce. There's that call wall of 4,000. Maybe they want it desperately back up here. But otherwise, we break 3,900 and we have a not just an air pocket of risk, but a air pocket of risk. It'll happen quickly. So I think 3,800 for year end is still my baseline bet. Almost made it to 4130 in a breakout. But we're now below, right, this kind of area of wedge. As long as we played inside the wedge, we could still move higher. But as soon as we get below that wedge, and we're toying right now with 3,900, the risk is to the downside. Firmly in the bearish camp and leaning into 3,800 for year end, even though seasonality and money flow is bullish typically. So I can be wrong. If we get back above 3,950, we're going to move back up to 4,000. we can get back above 4,000, we can move up right back up to that 4130. But I don't see the impulse now. We got all kinds of optionality to expire tomorrow that will set free typically volatility. Volatility expires next Wednesday. So I think we have just, some hedging that's going to take place. I can't help but feel that we are looking at a potential flush. Not at all priced in this week, not even a little bit. The market is so clear that 3,900, it is do or die. Place your bets. Okay, and on that happy note, I'll see you tomorrow morning. Absolutely add time though. Just keep that in mind that even there's a huge wall of puts at 3,900, a huge wall of calls at 4,000. So right now, those calls have obviously evaporated. They're going to defend here, or we're going to take a lower leg. It's really that simple.